They told us it was impossible. They told us the relationship between the United States and China was too big to fail. They said the global economy was so intertwined that neither side would ever dare to pull the trigger. Well, they were wrong. While the world has been distracted by wars in Europe and conflict in the Middle East, a silent financial war has officially begun. The nuclear option has been activated. China, the largest creditor to the United States for decades, has just signaled the end of an era. They are dumping U.S. debt. We aren't talking about a few $1,000,000 here and there. We are talking about a strategic liquidation that has seen their holdings plummet from a peak of over $1.3 trillion down to levels we haven't seen since 2009. This is an $800 billion exit strategy. It is the financial equivalent of a rug pull. And the scary part is they are doing it right when the US Treasury needs buyers the most. If this continues, the America we know, the land of cheap credit, stable dollars, and global dominance, is over. Welcome back to George Vance Live. We are the channel that tracks the money so you can protect your future. Today, we are covering the single most dangerous economic story of the decade. We are witnessing the divorce of the century between the US dollar and the Chinese dragon, and the alimony payments are going to bankrupt the middle class. We are going to break down exactly why China is selling, where they are moving their money, and most importantly, what this means for your bank account in the coming months. Before we connect these dots, do me a massive favor. Please hit that subscribe button and turn on the notification bell right now. We are growing this community of critical thinkers every single day. And I don't want you to miss the alerts we have coming up. It's free, it helps the channel, and it keeps you ahead of the curve. Now, let's look at the data that has the Federal Reserve sweating bullets. To understand the magnitude of this disaster, we first have to understand how the system was supposed to work. For the last 30 or 40 years, the global economy ran on a very simple loop. It was almost like a marriage. On one side, you had China, the factory of the world. They had cheap labor, massive manufacturing capacity, and a hunger to grow. On the other side, you had the United States, the consumer of the world. We had the dollars, the credit cards, and the appetite to buy things. So the loop worked like this. American consumers would go to Walmart or Amazon and buy sneakers, iPhones, and furniture made in China. We paid for those goods in US dollars. This meant that China ended up sitting on a massive pile of American cash. Now, China couldn't just spend those dollars in their local grocery stores. They needed to put that money somewhere safe where it could earn interest. So they took those dollars and loaned them back to the US government by buying US Treasury bonds. This was the golden loop. We bought their stuff. They bought our debt. This arrangement kept interest rates in America historically low because there was always a massive buyer for our bonds. It allowed the US government to run huge deficits without severe consequences. It allowed you to get a mortgage at 3 or 4%. It allowed the American standard of living to remain high, funded effectively by Chinese savings. It was a perfect system until trust began to erode, and right now that trust is completely gone. So why is China flipping the table now? Why dump $800 billion of assets? Mainstream media will tell you it's just because China's economy is slowing down and they need the cash. And while that is partially true, it is not the whole story. The real reason is fear, and that fear started on a very specific date, February 2022. When Russia invaded Ukraine, the United States and its Western allies did something that shocked the financial world. They weaponized the US dollar. In a matter of days, the US froze hundreds of billions of dollars of Russia's foreign reserves that were sitting in Western banks. Russia had built up a war chest of savings, but because it was held in dollars and euros, it vanished overnight. The leadership in Beijing watched this happen with absolute horror. They looked at their own situation. They realized that they were holding over $1 trillion of US debt. They realized that if China ever made a move on Taiwan, or if the trade war escalated, the United States could simply push a button and freeze China's savings, just like they did to Russia. That was the moment the psychology changed. US Treasury bonds went from being a risk-free asset to a high-risk trap. The Chinese Communist Party realized they were funding a country that could turn off their access to their own money at any moment. So they made a strategic decision. Get out. Get out of the dollar, get out of US debt, and get out before it's too late. This isn't just a sell-off, it is a frantic escape attempt. Let's talk about the mechanics here, because this is where it affects your wallet. You might be thinking, who cares if China sells some bonds? The US is rich, we can handle it. But here's the problem. The US government is currently addicted to debt. We are adding trillions to the national debt every single year just to keep the lights on. To fund this debt, the US Treasury has to issue more and more bonds. It's like a company selling stock to raise money. But for the market to work, you need buyers. For decades, China was the whale, the buyer of last resort. When the whale stops buying, or worse, starts selling, you have a massive supply and demand imbalance. You have a flood of bonds hitting the market with nobody to buy them. When nobody wants to buy bonds, the price of the bonds crashes. And in the bond market, when the price goes down, the interest rate, or the yield, goes up. This is the law of gravity in finance. If China dumps bonds, interest rates in the US must rise to attract new buyers. This is why mortgage rates spike to 7 and 8%. This is why credit card rates are over 20%. This is why car loans are becoming unaffordable. It is not just the Fed raising rates. It is the fact that our biggest lender is walking away from the table, that the price of money is going up because the supply of money from China has cut off. Here's the part of the story that gets really interesting. If China is selling billions of dollars worth of US debt, where are they putting that money? They aren't just stuffing cash under a mattress in Beijing. We track the flows here on George Vance Live, and the flows are heading to one place: gold. The People's Bank of China has been on an absolute gold buying spree. For over 18 consecutive months, they have been adding tons of physical gold to their reserves. And keep in mind, these are just the official numbers. Many analysts believe the real amount of gold China is buying is secretly much, much higher, hidden through proxy buyers and off-the-book transactions. Why gold? Because gold is the only asset that is not someone else's liability. You can't freeze gold if it is sitting in a vault in Shanghai. You can't sanction a gold bar. It is the ultimate insurance policy against a collapsing dollar system. By swapping paper US debt for physical gold, China is sanction-proofing its economy. They are trading a digital promise from the US government for a hard asset that has held value for 5,000 years. This is the clearest signal yet that they are preparing for a total break from the Western financial system. This sell-off isn't happening in a vacuum. It is part of a coordinated effort called the BRICS alliance: Brazil, Russia, India, China, and South Africa. And recently, they have added major oil producers like Iran and the UAE to the club. The goal of BRICS is simple: de-dollarization. They want to create a new global trading system that doesn't rely on the US dollar. For decades, if India wanted to buy oil from Saudi Arabia, they had to convert their rupees into US dollars to pay for it. This created a permanent demand for dollars. But now, China is telling these countries, hey, we will buy your oil in yuan, or let's settle our trade in gold. As China dumps US debt, they are simultaneously boosting the usage of their own currency and building an alternative financial plumbing system for the world. If they succeed, the demand for the US dollar collapses. And if demand collapses while we are printing trillions of new dollars, we are looking at a hyperinflationary scenario in the US. It's a pincer movement. On one side, they dump the debt. On the other side, they destroy the demand for the currency. Now, I know there are skeptics watching who will say, wait a minute, George, if China destroys the US economy, won't they destroy themselves? Americans buy all their exports. It's financial suicide. This is the concept of mutually assured destruction, or MAD. And for a long time, it was true. But the calculus has changed. China knows that relying on the US consumer is a weakness. That is why they have been aggressively pivoting their economy. They are trading more with Southeast Asia, Africa, Russia, and Latin America than ever before. They are trying to replace the American shopper with the global South shopper. Furthermore, China is willing to take economic pain if it means national security. They are looking at the long game, a 50 or 100-year timeline. They are willing to suffer a recession today to ensure they are not owned by the US dollar tomorrow. They are viewing this through the lens of survival, not just quarterly profits. The suicide argument assumes they care more about GDP than sovereignty. The actions of the last 2 years prove that assumption is wrong. So let's bring this back to your kitchen table. What does China dumping $800 billion really mean for you? It means we are entering a period of fiscal dominance. This is a fancy economic term that basically means the government's debt is so big, it overrides everything else. If China stops buying our debt, the Federal Reserve will eventually be forced to step in and become the buyer of last resort. They will have to print money to buy the bonds that China is selling. When they do that, the money supply explodes. This leads to what many are calling a silent depression. In the 1930s, the depression was deflationary. Prices fell, and nobody had jobs. In the 2020s, the depression is inflationary. You might still have a job, but your paycheck buys less and less every month. The cost of living grinds higher relentlessly. The China dump accelerates this. It forces the US to debase its currency to stay afloat. It means your savings are being eroded, not by a bank failure, but by the loss of purchasing power. It means the price of meat, gas, electricity, and insurance keeps ticking up, regardless of what the official CPI inflation numbers say. We are importing inflation because we lost our biggest financier. We also have to look at the political angle. As this unravels, you are going to see a lot of finger-pointing in Washington. Republicans will blame Democrats for spending too much. Democrats will blame Republicans for tax cuts. But the reality is, both parties are responsible for the debt accumulation that made us vulnerable to China in the first place. But here's the danger. When an empire starts to crumble financially, leaders often look for a war to distract the populace. A financial war with China easily turns into a trade war, which can easily turn into a hot war. The tensions over Taiwan are not just about territory, they are about the chip factories and the dominance of the Pacific. But underneath it all, it is a struggle for who controls the global ledger. If China continues to dump debt, the US might retaliate with capital controls or tariffs. We are already seeing tariffs on Chinese EVs and solar panels. This is just the beginning. We are moving from a world of free trade to a world of fragmented trade. And in a fragmented world, things are more expensive and less efficient. Is it all doom and gloom? Not necessarily. Chaos creates opportunity for those who are prepared. The smart money, the billionaires and the hedge funds, are doing exactly what China is doing. They are diversifying. They are looking at assets that are scarce. Real estate, despite the high rates, is still a hard asset. Commodities like oil, uranium, and copper are in high demand as the manufacturing base shifts. Bitcoin is increasingly being viewed as digital gold, a way to opt out of the sovereign debt mess. The window of opportunity to protect yourself is closing, but it is not shut yet. The sell-off is happening, but it is happening in slow motion. It took years to build up that debt, and it will take years to unwind it. You have time to adjust. You have time to look at your portfolio and ask, am I too exposed to the US dollar? Do I own things that are real? We have to accept a new reality. The days of the unipolar moment, where the US dictates the rules and the world follows, are over. We are entering a multipolar world. In this world, the US is still a powerhouse, but it is not the only powerhouse. China's decision to dump $800 billion is their declaration of independence. They are willing to take the hit to break free. This means the US government will have to learn to live within its means, or it will destroy the currency trying to maintain the illusion of wealth. For the average American, this means the easy mode of the last few decades is gone. We are playing on hard mode now. Financial discipline, owning assets, and staying informed are no longer optional. They are survival skills. The rug has been pulled. Now we have to see if we land on our feet or on our faces. To wrap this up, the headline China dumps US debt isn't just a news story, it is a historical turning point. It marks the end of Chimerica, the symbiotic relationship that defined the early 21st century. The $800 billion that left the building is not coming back. The trust is broken. The global financial architecture is being redrawn in real time. The US dollar is facing its biggest challenge since World War II. We can't control what Xi Jinping does in Beijing. We can't control what the Federal Reserve does in Washington. But we can control our own households. We can get out of bad debt. We can diversify our savings. We can educate ourselves. This is a massive story, and it is developing every single day. We are keeping a close eye on the bond yields and the gold markets, so you don't have to. I want to know what you think. Is China making a brilliant strategic move, or are they shooting themselves in the foot? And how are you preparing for this shift? Now, let me know in the comments below. I read through them to get a pulse on what the George Vance Live community is thinking. If you found value in this deep dive, please smash that like button. It really helps the algorithm show this video to more people who need to wake up to this reality. Share this with a friend or family member who thinks the economy is just fine. And of course, if you haven't already, subscribe to George Vance Live. We are here to help you navigate the chaos. Thanks for watching, stay sharp, and I'll see you in the next one.